Hi there, Serial Trader here. Let's have a look at the major US indices, and starting off as usual with SPX here. Now, nothing to really change on this time frame on the daily. Basically the same as yesterday's video, but we did come up here and we took out this on an intraday basis. We took out that 26.74.35 level. This critical level here, 27.08.54, remained intact. And intraday we rejected quite nicely and actually closed fairly weak, and we rejected the T line once again. So that daily T line still providing resistance, and I'm not going to be convinced that there's any kind of real bullish move taking place until that stops being the case. Until we truly get above the T line, close above it, ideally with a candlestick buy signal, and then start pulling back to the T line and have it act as support, and we're just not doing that here. So other than these bullish divergences, everything else, in my opinion, is still favoring bearish continuation. Now, just to do a little tweak here on the shorter term wave count. So here, yesterday, I had this minor wave 2 here, but it's easy enough to move it here now, and I'll get to what I mean there. If we go in on the 15-minute price chart and working off this bottom here, you can certainly get an easy 1, 2, 3, 4, 5 up. We'll drop that degree down to that, and then you can easily get some sort of ABC out of this, right? ABC down for a B wave, and then one more 5 up to finish off the C wave. And you can pick where you want to put this. Wave 5, maybe we had an ending diagonal, little ending diagonal wave 5, and if I just get the ABC out here, ABC, make sure we bump the degree up 1. Right. And actually this will need to go down 1 more degree. Sub minuet. This will go minuet. And then that's for 2. Okay. So that works just fine. And also, if we do some Fibonacci relationships, so we'll do our AC relationship. So we basically just got past the 618 AC relationship, which also happened to be the, go on the hourly chart here again, also happened to be the 786 retracement of this wave 1 down. So certainly still acceptable. And just leave that in place there. Get rid of the equality relationship, since that would be too far to remain a wave 2. So there's that. Now on the 15-minute price chart, once I saw this level get broken, it was kind of a mental stop. But I saw that we were having some bearish divergence here on the 15-minute RSI. So RSI was not making a new high, even though price was. And I believe there was a small bearish divergence on the 15-minute MACD as well. Just a small one there, but it just looked like a very kind of fading rally, kind of a false break of this previous high, not significant follow through, and then we started rolling over. So I'm still in the puts for now. At this point, absolute critical resistance level we must stay below to remain at least short-term bearish here, and that's 27.08.54. So if I'm on the right track, we have our 1, 2, and then now a 1, 2, and let me just throw up the parallel trend channel, and you can see at the end of the day we just started breaking below the lower boundary line of that parallel trend channel. So that's another good sign that we're about to resume the downtrend. And yeah, if I'm on the right track, we should be coming down here in a third of a third wave of possibly a larger third wave on that daily chart. So if I'm right, now I could certainly be wrong, and I've been wrong before, and I'll be wrong again. Although I've certainly been right before too, a fair amount. If I'm right here, we're going to come down hard, and it should be pretty soon. So we'll have to see what happens. But more importantly, if I am wrong, this is where I'm wrong. For this current immediate interpretation, if we take out 2708.54, there's just something else going on. I'll have to rethink at least the short-term wave scheme, if not a larger time frame. But for now, no reason to believe it's wrong. And we'll get to the Thinkorswim candlestick chart to reinforce my view here, aside from the Elliott waves. So let's go there. Now the SPX daily candlestick chart, we have a nice bearish hammer. Okay, so this was a bullish hammer, which had, well, you could say it had 1 day of positive trading, but on a closing basis, not really. Intraday, it certainly had some upward follow through that failed at the T line. But here we have an inverted, so a bearish hammer pointing down, and you know, closed lower than we opened, and we have a nice long upper shadow, which is the handle of the hammer. So this is a strong sell signal, particularly that it was right at the T line, and the T line once again providing resistance. We just can't get above the T line, and there's certainly nothing overly bullish going on until we can get above that T line. And I just won't sway my view until that changes. So we have a legit candlestick sell signal. The Elliott wave, you know, even on a short-term basis, still favors further downside. And until proven otherwise, we're still in this downtrend. And if I'm really on the right track here with the wave interpretation, we should be coming down hard very soon here. Okay, now on to the Dow Jones Industrial Average. And okay, the Dow, very much the same situation as SPX. We did a bearish hammer today, so a long upper shadow, small real body. That's the handle. Rejecting the T line once again as resistance. So implications for the Dow are also more downside. I won't go too much further than that with the Dow. NASDAQ composite, also showing the same picture. So we have a bearish hammer sell signal, and still try to get above the T line, but you see here on a closing base, it's still closed below the T line on the NASDAQ. Did a bearish inverted hammer. So implications for that are also further downside. Okay, now going to the VIX. All right, so the VIX. The VIX had a little bit of a pullback today, but nothing substantial. Looks like we're just consolidating after this initial move up. So obviously, if the equity markets start trending down again, we expect VIX to start trending up again. But I have more to offer in the in the way of VIX, as I've been introduced to a new tool. I'll briefly go over it here, and I'll actually do a separate kind of instructional video on it when I get some more time. Maybe not tonight, but sometime this week, maybe tomorrow or the next day. And it's basically a tool for timing buys and sells on SPX using VIX versus VVIX divergences. And so on the VVIX, you have a 55 period simple moving average. These are all 30-minute bar charts. On the VIX, you don't have a moving average, just a bear chart. And then on SPX, you have a 65 period simple moving average. Okay, so basically the system works this way, and you don't want to trade purely off of this, but it certainly is complementary to other analysis such as the candlesticks and the indicators and oscillators and the Elliott wave that I do. This will just add just one more dimension, kind of like a complementary thing, right? So basically what you're looking for is a divergence between VIX and VVIX. It doesn't matter which way. VVIX could be making higher lows while VIX is making lower lows, or vice versa. It doesn't matter which way the divergence is. It just matters that there is a divergence. And then what you're looking for is, once you have that divergence, you're looking for, in this case, since VIX is below this moving average, and VVIX is below this moving average, and SPX is above this moving average, what you're looking for is VVIX and VIX to do their divergence, which they are currently doing. So right now VVIX is making higher lows, while VIX made lower lows. And now we're looking for VVIX to get above this 55 period simple moving average, and simultaneously we want to see SPX get below this 65 period simple moving average, and that would be a confirmed SPX sell signal using this system. Now if I just go back here, so this was, you can go back and find all kinds of these divergences and signals that they gave, and more often than not they've proven to be pretty good signals for both buying and selling. But okay, right now I'm presenting the current SPX sell signal that's developing. But if we go back here, we'll look at this previous SPX sell signal that developed. And okay, so here we had the VIX making higher lows, VVIX was making lower lows, so we had our divergence. SPX was in its little uptrend here on this 30-minute chart. So we're looking obviously for SPX. We need the confirmation of SPX going below this blue moving average, and we need VVIX to go above this red moving average after getting our divergences on VIX and VVIX. So you can see as soon as that happened, VVIX got above its moving average here, while simultaneously SPX got below its moving average here. And if you'd sold short here on SPX upon those two things happening basically simultaneously after that divergence, you had a pretty nice little down move. Obviously we bounced up and then down again. So even just, it's a pretty late signal from trying to catch a top or a bottom. But as far as an entry, there was still a pretty good downside move there, just waiting for that confirmed signal to sell, to sell short or to buy puts or whatever you're going to do. Now if we go back, I've only highlighted those two right now, but I'm sure I can find another one. Let's see if I can do that now. Let me just scroll back to the last time we had a decent pivot. Okay, so how about over here? Okay, I see it now. All right, so over here we had a divergence. So VIX made a higher high here, while VVIX made a lower high here. Okay, and at that time SPX was in a bit of a downtrend already. Okay, so we're looking for that downtrend to change. So over here we came below the red moving average here on VVIX. We were still below the blue moving average on SPX, so we had to wait a little bit. But you can see basically the selling stopped and we started finding support. Now once we came above the blue moving average on SPX, that was a confirmed signal after we had the divergence on VIX and VVIX. And after we got below that moving average on VVIX, we then had to wait a little bit for SPX to confirm get above the blue moving average. But if you'd gone long upon SPX getting above that blue moving average, you can see it trended up quite nicely here. Significant move, right? So these things, they don't work like clockwork, but they're just nice to add to your existing analysis. I wouldn't use this as a standalone trading system, but it certainly provides a nice little complementary signal to the existing analysis. So I'll be referring back to this fairly often, I think. And I'll probably do a separate video just explaining this perhaps in greater detail. Maybe even just explaining what VVIX is and all that. But That's good for now. So yeah, bottom line, I'm still holding the puts after being severely tested today. I was almost ready to get rid of them, but I just saw that we're possibly at another turning point, and I'm glad I waited, because on a closing basis with this signal, certainly looks like further downside price action is in the cards. And at this point, critical support 2708.54, and really today, since this is the candlestick signal, the top of this hammer is really a key level. Wouldn't want to see 2685.44 get taken out at this point. All right, so that should be good for now. Serial Trader signing off.